Welcome to the deep dive. We're jumping straight in today with really a seismic shift in the business world.
Yeah, it's a big one.
Warren Buffett, after an incredible 60 years leading Berkshire Hathaway, he's stepping down as CEO at the end of 2025.
60 years.
Yeah.
It's hard to even wrap your head around that kind of tenure.
Absolutely. And the track record, roughly 20% annualized return on Class A shares. That translates to, what, a cumulative gain of over 6.5 million %?
Just staggering numbers.
Yeah, compare that to the S&P 500 over the same time. Even with dividends, it's under 39,000%.
Yeah.
Buffett's performance is just unparalleled.
It really is. Definitely the end of an era. And naturally, everyone's looking at Greg Abel now.
Right, the current vice chairman for non-insurance operations, he's been seen as the successor for a while, hasn't he?
Yeah, since about 2021, Buffett hinted at it, and Charlie Munger basically confirmed it before he passed.
So board approval is still technically needed, but he's pretty much the guy.
Seems that way. Given his experience running a huge part of Berkshire already, he's the clear and logical choice.
Okay, so for this deep dive, we've really tried to unpack what this transition means. What's likely to stay the same at Berkshire under Abel? What's going to change?
And there's this interesting shift in investment strategy that's actually already happening.
Exactly. So the mission today is to give you, our listeners, a really solid understanding of the implications as Berkshire heads into this new chapter.
So good.
All right, so let's start with what won't change. What are the core things Abel is expected to keep in place?
Well, the big message seems to be continuity. Abel himself has stressed, reinforcing that long-term vision.
The Buffett and Munger way of thinking.
Precisely. That core ethos, the principles they built the company on over decades, that seems very unlikely to just be tossed aside. It's deeply ingrained.
And that extends to some of those core holdings, right? The ones Buffett calls indefinite investments.
Absolutely. It's highly unlikely Abel would suddenly decide to sell off massive stakes in Coca-Cola or American Express or Occidental Petroleum.
Makes sense. And what about those Japanese trading houses? They seem pretty important, too.
Oh, definitely. Mitsubishi, Tochu, Mitsui, Sumitomo, Marubeni. They're strategically vital in Japan's economy.
And they fit the Berkshire model.
Yeah, pretty well.
Yeah.
Relatively modest executive pay, strong capital return programs.
Mm-hmm.
They tick a lot of the boxes that Berkshire likes. So, yeah, those are probably staying put.
It's also interesting how much Berkshire is tied to just the U.S. economy in general. That belief seems fundamental.
Totally. Buffett's whole philosophy, never bet against America.
Right.
He always understood that, recessions happen, but expansions last longer. And Berkshire, with its, 5 dozen or so businesses, plus the huge investment portfolio, it's deeply woven into the fabric of the U.S. economy.
So that underlying belief, that foundation, that probably doesn't change with Abel.
I wouldn't expect it to. It's too core to Berkshire's identity.
Okay, so we've got a good handle on the continuity part, the core values, the key long-term holdings, the belief in the U.S. Let's pivot to what will change when Buffett steps back from the CEO role in 2026. Where are the big shifts likely?
Well, the most significant one, I think, has to be the final say on big money decisions.
Capital allocation.
Acquisitions.
Exactly. Major acquisitions, large investments. Now, Buffett's staying on as non-executive chairman, so he'll still be there, offering advice, especially on, the really huge opportunities.
Sure, his experience is invaluable.
Right. But the ultimate decision, the sign-off on deploying Berkshire's massive capital pile and buying future businesses, that responsibility falls to Greg Abel.
That's a fundamental shift in the power dynamic, isn't it?
It really is. And think about what that means for Todd Combs and Ted Weschler.
Buffett's investment lieutenants.
Yeah. They've been managing increasingly large chunks of the portfolio for years now. But for those really big multi-billion-dollar calls, they'll now be reporting to Abel, not Buffett. That could definitely change the flavor of some future investments.
Could do. Another area is the capital return program.
Dividends still seem unlikely, right?
Probably, yeah.
Yeah.
That hasn't really been the Berkshire way. But share repurchases, that's different.
Buffett's used buybacks quite heavily recently.
Hugely. Since mid-2018, he authorized almost $78 billion in buybacks.
Wow.
Yeah, it reduced the outstanding share count by over 12%.
Yeah.
And get this, that amount, $78 billion, is more than the original cost of his stakes in Apple, Bank of America, Chevron, Oxy, Coke, and AmEx combined.
That really puts it in perspective. So Abel takes over the buyback decisions.
He does. And he's actually said he intends to keep using them, when Berkshire stock seems undervalued.
So following the same principle as Buffett there.
Seems like it. but does raise questions, like you alluded to earlier. If buybacks remain a major tool, does that mean fewer giant acquisitions? Or maybe a different approach to finding them without Buffett's legendary deal-making touch?
That's the big question, isn't it? How does Berkshire find its next elephant-sized acquisition?
Exactly. So the principles might stay, but the person making the final call, and maybe the emphasis, that's shifting.
Okay, so let's dig into this big change already underway that our sources mentioned. This points to the investment strategy itself evolving, even before Abel officially takes the CEO chair.
That's right. It's really about the growing influence of Combs and Weschler on the portfolio itself.
Over the last few years.
Yeah, increasingly so. And what we're seeing is, well, a bit of a departure from Buffett's classic long-term, deep value approach.
How so? What does that look like in practice?
Well, for one, you're seeing some shorter holding periods, maybe call them swing trades, though perhaps that's too strong. But definitely not the decades-long hold Buffett is famous for.
Okay.
And also stakes in companies that, frankly, are outside Buffett's usual wheelhouse or areas he's admitted he doesn't fully understand, particularly in tech.
Like the Snowflake investment. That gets mentioned specifically.
Yes, exactly. That's a really good example. Berkshire made a multi-year investment in Snowflake, the cloud data warehousing company.
Which Buffett reportedly wasn't directly involved in?
That's the report, yeah. And what's striking is Snowflake has always traded at a really high sales multiple. Very expensive relative to its revenue.
Which is kind of the opposite of Buffett's typical value hunting, right? Looking for cheap stocks relative to earnings or assets.
Precisely. Plus, Buffett himself has often said he doesn't really get the intricacies of cloud computing. It wasn't his area.
So this signals maybe Combs and Weschler are more willing to pay up for growth or invest in complex tech areas?
It certainly looks that way. They seem to be bringing more of a growth-oriented focus into the portfolio, something that wasn't really front and center before.
And the shorter holding periods. Any other examples?
Yeah, the sources point to buying and then selling the entire stake in McKesson within about a year.
Okay, that's definitely not typical Buffett.
No. And a similar thing happened with Royalty Pharma, a relatively short holding period. It just shows a more active trading style than Buffett's traditional buy and hold.
Suggests the portfolio might be managed more actively going forward.
It certainly hints at that possibility, yes. More dynamic, perhaps.
Okay, so let's try and wrap this up. Looking ahead, Berkshire under Greg Abel seems like it'll be a mix of old and new then.
That's a fair summary.
Yeah.
You got the continuity piece, the core principles, the indefinite holdings like Coke and AmEx and the Japanese firms, the belief in the U.S. economy. That bedrock seems solid.
But then the big changes, Abel having the final say on capital allocation.
Right. And Combs and Weschler, reporting to Abel for those big investment plays, already steering the portfolio towards, well, maybe more growth, maybe more tech, maybe slightly shorter time horizons in some cases.
A portfolio that's already evolving.
Exactly. It's not waiting until 2026. That shift is happening now.
This has been really fascinating, digging into what's changing and what's staying the same at such an iconic company.
It's definitely a pivotal moment for Berkshire.
It really is. And that leaves us, and you listening, with a final thought to chew on. How will this blend these enduring values combined with these evolving strategies under new leadership? How will that shape Berkshire Hathaway's performance and its influence on the investment world in the years to come?
And what does this transition really mean for the legacy of Warren Buffett himself?
Great questions. Thanks for joining us for this deep dive.